Ready to rock and roll? Is that action? All right.
Okay. That's right.
All right.
Absolutely. Go. Go.
Hello, everybody. It's Jason Will with
Go.
So this is a real estate podcast, but we talk about leadership, personal growth, and becoming the best version of yourself. Leadership, check 1, 2, check 1, 2. Growth, best version of yourself.
Go.
So this is a real estate podcast. Welcome to the Agent 251 podcast. Jared, Joey. Jared, why don't you go first? Tell everybody who you are in case they forgot last time you were on the show.
Yeah, thanks for having me, Jason. I'm Jared Irby Home Buyers, a local real estate investment company. We do a lot of wholesaling, work with investors to buy and sell properties. We buy off-market distressed properties and then either flip them to other investors or keep them in a rental portfolio.
How can people, if they want to see your inventory of investment properties that you have for sale, where can they find those?
Yeah, check us out, irbyhomebuyers.com, or link up with me on Facebook, and I'll put you in touch with the right folks.
Because you send out, what if it's daily, weekly email updates? You can get it via text or email or both?
Yep, text, email. We even send them out on Facebook. You know, usually we send out a couple per week that are great, investment properties for investors to purchase.
All right, and it seems like Joey kind of is, what's he just dabbling in real estate investing?
Oh yeah, he's just
kind of a beginner.
He's just a beginner, yeah.
just getting my toes in there, just to feel it out a little bit.
No, this guy's a rock star.
Tell us a little bit about it, Joey.
So I've been in the business for about 5 years now. I started out assigning contracts, wholesaling, just like what Jared does. I still do a little bit of that, but mostly I flip houses and then I acquire property for rentals. Probably do a lot of marketing just like he does to find the deals. Very similar situation. The difference is I'm looking to purchase. I want to either flip it, or if I can't, I want to rent it out. So
is this something you do full time or part time?
Full time.
Full time.
Oh,
So
yeah.
This is your career.
This is it. I decided I was in the car business for 12 years, and I just decided I was tired of, making a whole bunch of money and giving up my life, and I wanted to run my own gig. I figured if I was going to put in the time and the work, I wanted to get the full benefit of it. So this is what I decided I wanted to do. I started out with the idea that I'd flip houses. My end game was the rentals. I just didn't know how I was going to get there, but you know how life works. You started making plans and going one way, and then all of a sudden opportunity presents itself, and here I am. Before
we move on, this is an interesting question just popped in my brain. So how do you decide whether a property is going to be a flip or a hold?
Mostly it's going to be the end price. What I say is I want to flip houses that are going to retail after I'm done fixing them up. Probably somewhere between 120 and up to 300. I'm starting to kind of stay away from the higher end ones. Buyers are a little bit more picky, and
right.
There's some, the money costs and all these other factors. They're not as profitable, but the 110, 120 to 150 is a sweet spot for sure in this market.
There's a lot of talk and scuttlebutt about market shifts and economy slowing down. I would assume that a lot of people aren't, which is good for you guys, because a lot of people feel like, well, there's not any deals right now because the market's up. But I think it's interesting in what you guys do is that whether the market's up or down, it's good.
Yeah, that's why I buy rental properties. I'm sure that's why you do too, is, you got to have a balance of that, making those big chunks of money, and then also have that long-term cash flow that's kind of the wealth building, approach. And the good thing is in a down economy, people can't buy houses. They tend to rent more. Rent prices go up. I've seen some upward pressure on rents. I don't know if you have too. So that's just good for the rental business, and hopefully that continues.
And when the market's up, it's good for flips, right? I mean, the profit margins are greater, and it's there, right?
That's right. And then, specifically more in Mobile, your inventory squeezed. If a buyer is looking at a $150,000 house, there's not a whole lot for them to look at. So if you've got a fixed up house, nice, updated and stuff like that, typically they're going to favor that. They're going to want to make a deal on that. Now, when you get into the negotiation, the market still is, the buyer has a little bit of pull, so that doesn't favor the flipper, but it still works. It's still a definitely a profitable thing.
I think the takeaway because our audience is primarily real estate agents, I think the takeaway from what you guys are saying, just to infuse a little coaching out to the real estate industry, is that no matter what the market's doing, you guys just if it shifts the opportunities.
Oh yeah,
but there's
absolutely.
opportunities in every market.
Yeah, you've got to stay nimble, stay dynamic, and there's opportunities in every market. I mean, right now it's maybe getting listings is tougher. Prices have gone up, and but you also got a lot of buyers. You're getting multiple offers when you do get a listing, and stuff's moving quicker. So you just got to change your tactics on what you're kind of able to accomplish and the services you can provide. Just depends on what's going on. I mean, probably 5, 6, 7, 8 years ago, just go down to the auction, hold your hand up, and buy everything that occurred.
Right.
was the way to get a deal, right? And now that doesn't exist that I've seen.
No.
We don't buy anything from the auctions now. So you have to adapt your strategies to the market you're in.
That's interesting. So you're not doing much or anything at the courthouse steps these days?
I'm not at the moment. I don't know if you are.
No, it was never my game plan.
Really?
Yeah.
Oh, that's interesting. That was a good little bunny trail, but this show is specifically about Section 8 investing. It's a super hot topic in the industry right now, and you guys are local experts in the Mobile County market, or primarily all your properties in Mobile County?
Mine are all in Mobile and a handful in Baldwin County. So
I have one condo in Baldwin County.
One condo. And you have 60, somewhere in the neighborhood of 60 Section 8 rentals in 5 years.
Yeah.
That's impressive. And you said about 15% of your portfolio.
Families, yeah. So, I don't know exactly how many, but it's a handful at the moment, but it's been up to, 15 at a time.
We talked about Joey being in the business, this real estate investing game for 5 years. How long have you been in it?
I've only been in full time about 3 years, but was doing it kind of on the side with another job, for 4 or 5 years before that.
It's just fascinating to me because just if you look how the speed of the evolution of both of your respective businesses is insane. And I think it speaks to a lot of the issues that people have out there with their mindset. Like, I got to wait, in 10 or 20 years, I may be able to buy an investment property. So before you guys are so interesting.
Well, there's that like Chinese proverb, like, when's the best time to plant a tree? It's today, right? It was either yesterday or today, right? And it's the same thing with investing. Like, you need to be taking action like ASAP, like right now,
Well, Joey, did you win a scratch off, or do you have a rich uncle, or, how did you rob a bank? How did you get this cash to start investing?
Well, I'll tell you this, my story has to start with the Fortune Builder program. It worked for me. I think it's anything else. It's something that's going to be what you make it. So I started there. They give you a guide. 6 months of my life was watching little videos and doing exercises, and they have a coaching program and stuff like that. So I started from there. So it wasn't like I just woke up one day and was like, hey, let me go look at houses,
Right.
So in the way that I, people were like, why do you buy into this? Why do you pay that much money? And I said, well, you could open a pizza shop, but do you want to open your own, or you want to open a Domino's? So Domino's already has everything in place. So I started there, and then it gave me a path. It gave me a path to start working on, and it gave me exercises. I don't know if my uncle's rich. I might find out when he passes away. But they have. I use private money.
Yeah.
And what I do is I've set up a business to where I create a product that they can invest in and they can get a return on that profits them and allows me to do what I do.
And I think your approach is the same, Jared. People are out there looking for deals. They don't have the time or the opportunity, and this is what you do full time. So if you go out there and say, hey, I've got this amazing deal, people are going to say, well, I've got money. I want to get involved in that.
So I'll tell you the coolest thing about real estate, if you're just looking at it from kind of the financial, nerd perspective and how you scale quickly, is that real estate has cash flow. It's a hard asset, and it's very easy to borrow against it, right? So banks and lenders and people like that, they want to see cash flow and they want to see hard assets. So you've got literally the perfect storm, and that's why you're able to scale a portfolio quickly. If you're able to go out and find, good deals on houses, you can fix them up, be in them, and then refinance out your money, and then move on to the next deal and do it over and over and over again, which I assume is probably what you've done as well in similar ways, right?
That's right. The thing is your investor's always going to be secured by the real estate. They're never actually going to write you a check. They can send it right to the title company, so everything gets secured. Everybody's in a good position. It's just, really it comes down to the deal. It comes down to the numbers, and that's why, I've been, starting out, and even now, I'm pretty stuck on the numbers. If the numbers aren't working, I walk away from the deal. I'm not going to push it.
Yeah, and it's also kind of another reason why the Section 8 and the low income, properties are good is because the rents compared to the price you can be in them at is pretty good. So, you can be in a property for, I don't know, 20 grand and it rent for $600, $700, $800 a month, which, if you're buying in, Class A neighborhoods, that's not going to happen.
So what you guys are finding on a pretty consistent basis is that these investors out there just waiting to be activated. And they're waiting on the deals, and they're waiting for somebody like you to put it in front of them and say, hey, the numbers work, and it's tried and true, it's proven method, and is there little to no risk, would you say? Well,
I think all investments have some risk to it, but I like to deal in safe, conservative bets, so we're dealing with houses so far below the median house price that these houses didn't really change in value much through the recession and, and all that because, how much cheaper could it really get, right? Like it's already pretty cheap. Like it can't get that much cheaper,
That's right.
A couple $1,000s cheaper is a huge percentage difference, right? So, it's not like there's a lot of chance for massive losses, plus they're cash flowing every month. So, worst case scenario, you wait.
And that the most important thing is that you make sure it cash flows. I buy rental houses with tenants in it from people that may not have understood that to begin with. So they go into it thinking that this is going to be great, but they get a note against it and it doesn't cash flow, and all of a sudden the roof needs to be. Well, where's that going to come from? So you've got to go in it knowing that this is going to cash flow and eventually it will pay for itself, or the repairs should, you should be able to recoup the repairs on it, So if you look at it that way, then you're really minimizing your risk, But if you're just going in and say, I own this house and it's not cash flowing for you, you're putting $50 every month in your account, then it's probably not going to work,
I wanted to talk about flipping because you are not a great fan of it, correct? Is that fair?
It's okay. We do flip houses maybe one a month or so, and I've made a lot of money doing it. It's not my biggest passion for sure.
So and let me just say that I'm not a big fan of it either.
Yeah, you put in a lot of work and you make money one time, right?
Right.
Plus the process is just so drawn out. It's by the time you buy it and sell it. At a minimum, you're in it 3-4 months, and so if you're lucky, if that everything goes perfectly, So once you stretch it out to 6 to 8 months, the money cost on it's just going to eat you up.
So Joey, if you're looking at an investment, you're like, I really bought this like tremendously below market value. It's such a steal of a deal. That in your mind looks like more of a flip potential than a hold potential?
Like I said, it depends on the price. So I think when we were talking about that, I didn't finish with what determines a rental. What determines a rental for me is anything that I look at under $100,000, I'm going to consider it for a rental. I used to flip right at those $100,000 houses, first-time home buyers, in those kinds of neighborhoods. But then I realized that I could actually rent these out, and they would hold, they're in a little bit better neighborhood than my other houses. So what I'm trading is I'm actually trading value for maybe the rent multiplier, so my return is probably not going to be as high. It'll still be good. The house will still cash flow, but I'll have a little bit more value in that house. So I do have some of those where I'm not doing Section 8. And what determines that for me is really what I can get on the rent. So the Section 8, I don't buy a house that I can't get at least $650 rent on it. I don't want anything under that. For me, it's just a transient person. They're going to come and go. They probably don't have much income, and they might have a Section 8 voucher, but it's just a whole different ballgame the way that I see it. So from $650 to $900, typically what I get on a Section 8 house is, a woman with 2 kids or 3 kids that has a job, which I prefer them to have a job. I do qualify for them that way. I don't really want somebody sitting in my house all day. I want it to be an assistance program, which is what Section 8 is really set up to be. It's not supposed to be a handout. It's just supposed to be, hey, you have 3 kids and nobody else is helping you out. Let's get you going, and that way everybody's good. So that's the kind of formula that I look for up till about 900. If I'm going to get more on the rent, then it's probably not going to go Section 8. I'm looking for, somebody that's got income, pretty stable. It's a little bit nicer neighborhood. So I have some that I've probably got about 15 or 20 houses that are range between 950 and 1200.
Wow. So let's talk about, because there's a lot of people out there that have really no idea what Section 8 is, why it's advantageous for the investor, but also for the tenants. Like you said, it's more of a handout versus a hand, it's a hand up versus a handout. But let's do a deep dive and get both of your perspectives on what Section 8 is and why it is important.
So to me, what Section 8 is, like I said, it should be an assistance program. And that's the way that I look at it, because I want somebody to work, that lives in my house. I work, they work, everybody works. That's what I think keeps our economy going. What I don't want in my house is somebody that's there and just not doing anything. That's a lower income situation. And what I want is, some kind of path where eventually maybe they don't even need Section 8. But for my purposes, Section 8 is going to basically subsidize their rent. When I advertise this house, I'll take the voucher, and then which is what they have. They have a voucher from either Mobile or Pritchard Housing Authority, and basically the housing authority is going to pay a portion of their rent, and they're going to pay a portion of their rent based upon their income. So they have formulas and stuff and do what they're going to do.
So how do they qualify for a voucher?
Well, there's a process that they go through where they apply for it. They have to provide proof of their income, that kind of thing. And then, like Joey said, there's some scales that say, if you have this many children or this many dependents, and it's this situation and this income, then you get X dollars per month, in Section 8 assistance, basically. And the way that works for a landlord, and to me, what Section 8 is it's guaranteed rent from the government, essentially, as long as you keep the house in the condition that's required to by the Section 8 program, then you're basically guaranteed your check at the same time every month, deposited into your account. And so that's what it is to me, is just kind of a way to have a little bit more security, knowing that you're going to get paid at least the government's portion of their rent every month. And that's what's nice as a landlord to me.
Well, really, even if they have a good portion of the rent, you're going to get paid your rent because they're going to pay you. But even, let's say they lose their job, then Section 8 starts to pay the whole thing.
They do.
Yeah, that's true. Yeah.
So
they step up in.
It's almost what you're saying is guaranteed rent.
For a period of time, will Section 8 say, well, we're going to step in until you get this new job? Like, we're going to cover the whole cost?
Right. So every year they have a meeting with their worker where they have to qualify, So, and that's a yearly thing. Your house has to pass inspection, yearly thing. And the backlog of them getting a voucher is like 3 years. So the way that I look at it is, when they get their voucher, they want to stay on the voucher. And a requirement of that is that they report all income there to them, and they also keep your house up. And that's the conversation. Well, I have that whether it's a $650 rent house or a $1,200. Are you going to keep my house up? That's a function of character. That's not a financial thing.
Right.
The Section 8 part of it. Every time I talk to somebody and I tell them, they're like, "Oh wow, I never want to deal with that. They're horrible." I'm like, "Where are you getting that?" Some of my best tenants are Section 8. There's one lady that's been living in my house 3.5 years. I walk in there, it looks like the day that I finished working on it and cleaned it up, man.
Yeah, I haven't noticed any more issues with Section 8 tenants than normal issues, and probably less just because the payment issue's off the table. So in my eyes, they're just as good, if not better, a lot of times because they want to stay on that program. Yeah. And part of it is not messing the house up, or they can lose out, if a landlord evicts them, they can potentially lose their assistance forever, which, it could be hundreds of dollars a month, $500, $600, $700 a month, you don't want to lose that. So you tend to take care of the properties better, in my opinion.
Yeah. Well, I tell them, I'm like, if something goes wrong, you call me or text me. I don't care when it is. Just because, a quick fix today, I had a lady that was letting the bathroom valves just leak. And all of a sudden, a $50 fix, it becomes $300. I'm like, why are you doing that? And she said, I didn't want to bother you. I was like, are you kidding me? This is my house. This is my product.
Yeah,
this is what I'm providing you. We need to make this right. Don't be afraid to call me. And plus with me flipping houses, I got guys working all the time. So it's a phone call. It's like, hey, you want to go take a look at this? Yeah, sure.
Yeah, the ones we've listed, sold in the past, and ones that we have for sale now, Section 8 properties, one of the big selling features is that a lot of times the tenants have been there a decade or more. And so it's attractive to the investor. Like, wow, it's a good tenant.
Yeah, it seems like, and this is just, my opinion, it just seems like that once you do get on some kind of program like that, you tend to stay in it. And then you also the process to get in the home and get through the inspection and all that, it is slightly tedious. It's not, it's doable, but it is slightly tedious. So to me, once they get in, they seem to stay there, longer than your average tenant, because it is a longer process to get in there.
Yeah, man, to get out is another whole process.
Yeah.
They got to go get a move voucher and go look for houses and do all that stuff. And, I've had people tell me that I'm going to move, and then they end up, they're like, oh, I'm just going to stay,
Yeah, because it's definitely an involved process, yeah.
And the way that works out from an investment standpoint is that I want the money is in the turnover. So if you have somebody moving in and out, then you're going to be in there painting, you're going to be fixing things and stuff like that.
Yeah, vacancy, stuff like that.
If they exactly. So if they stay, the longer they stay in the house, the better your return. So on my Section 8 tenants, my average is like 3-4 years at their average. And outside of that, it's probably 1.5, 2. So, of course, that's going to be better for me, because then I don't have to go in there and do the fix-up and spend the time to get somebody else in there and do all that stuff.
So how do they, if they don't have a job, when they can actually get this voucher without having current employment?
Yes, they can. And I've had a couple tenants where they have a job when they move in, and 2 months later they don't have a job, and they haven't had a job since. So, the qualification, yes, the answer is yes, they can. And I have some that don't have jobs, but I try to screen my tenants where they do have a job.
Yeah, and as a landlord, you still screen your tenants the normal way.
Right.
If you see a bunch of evictions and stuff like that, that's still a no-go. You don't have to take the person.
That's a good point.
In fact, you're supposed to, use your normal qualification criteria, legally speaking. You're supposed to use your normal qualification criteria and just use that Section 8 as kind of additional income, basically, to support the rent. At least my understanding of it.
Yeah, and Section 8 tells you that.
Yeah.
They say we've done what we were going to do with background checks on these people, but you need to do your own due diligence also. Plus, you want to make sure you are comfortable with the person that's living in your house. There's some people out there that just will take a voucher from anybody. I won't do that. I had one lady pull up, and she had the radio going in the car, 2 kids in the back, and she smelled like weed. I was like, there's no way. There's just no way you're living in my house. It's just not happening.
Well, with as many properties as you guys collectively have, how do you stay connected to these tenants? How do you stay connected to the condition of these properties and maybe some signs of age and normal wear and tear? Like, how do you stay on top of all this stuff?
Well, so what we do on our properties is we use property management software that they can all text in maintenance requests. They can go online and pay their rent, submit maintenance requests, things like that. And when we get a maintenance request, we want to get out there quickly, and so a $50 problem doesn't turn into a $10,000 problem, right? And so that's one way we do it. We're also at the properties quite frequently, doing some kind of maintenance or trying to check it out as often as we can, and really like to stay kind of involved, make sure the tenants know we still exist and are taking care of the house. So we want to be in there as much as possible, which is kind of, if you're using a property management company, you want them to be, kind of have those same tactics. If you're doing it yourself, you want to not disturb the tenant all the time, but I think you want to be in there, frequently. It's your house, and I think you need to see what kind of condition it's being kept in.
Fortunately for me, the flips allow me to just do this. So, before I even walked in here, I was on the phone with one of my tenants for about 8 minutes, and she has a leak in the sink. But then I'm talking to her about other problems and things in life, so I tried to bring some kind of human aspect to it too, so that they understand that I want the house to be like it would be my house. And I want the house to be a place that they want to live, and not as opposed to have to live. So when they come in and pay rent, I have my AC guy bring me cases of all the filters in my houses, all the sizes. So when they come in and pay rent, I hand them one or two. And then I ask them, I have an office and I have people, and I say every time they come in, you ask them for, give them a filter, and then ask them what, is there anything going on in the house? So you want them to know that you care. It's important for two reasons. One, because you want the house to be right. The other two is the rent. The moment that someone thinks that you don't care about the rent, they become a slow pay. And at least in my mind, that's what it is. And you don't want to get there, because you start to get a slow pay, they never catch up. I don't care if it's 10 days, 15 days, 20 days, they're never going to get back to paying on the first or whatever.
Yeah, I agree. You want to make sure you keep paying the rent as front and center.
Yeah, exactly.
For sure. That's like the whole point of this. That drives everything.
Right. You want to be in the front of their brain.
Right. And do the majority of your tenants physically bring their checks to you? Is that your process?
A lot of them, because they're, most of them, I don't even think they have bank accounts. Which, with the way the banks charge fees, I don't blame them. They're on limited income, and they don't want to be feed to death. So, I still take cash. I give receipts. I also bring money orders, and stuff like that.
Now, let me say this. Yeah. I
do have a Dropbox.
Okay.
And the biggest reason I bought the office I'm in is because I could put a Dropbox on the front door.
Yeah.
It's life-changing.
Yeah.
The days of me running around to get rent, because if they tell you they got rent and you're in this business and you're not running to get it, you got to get out.
Yeah, you
right.
When they have the rent, you get it right then.
Exactly. Because if it's a Thursday and you're like, well, I'll pick it up tomorrow, it's going to be short. So,
right.
So you got to have that mentality. You got to go. But now I bought that. I put the Dropbox out, and I said, I sent a postcard to everybody that said, pay your rent 24 hours a day. And yeah. So
are most of y'all's properties in like defined areas or tight radiuses? If you find a deal out in West Mobile or Satsuma or something, are you going to be less inclined to look at that property, even though it's a good deal, because of the distance?
Well, I would prefer to be in West Mobile or Satsuma or something like that. But mine are fairly spread out. I mean, we do have, we've got one neighborhood, we have 4 or 5. We're buying a package of like 16 right now. And those are pretty defined areas. But for the most part, I kind of buy what I can find, which I don't know if that's kind of how you are too. But.
I'm all over. I'm not going to say I'm all over Mobile County, but I got some in Theodore. I don't want to go too far, because that means the guys that fix the houses have to go far too.
Yeah, we're about a 20-25 minute radius from our office.
Right.
Is kind of what mine is. Exactly. Even the ones into Daphne, it's probably 25-30 minutes at most.
I do have one house in Creola, but I made the deal because the deal was good, and I really like the house. So That's the exception to my rule. But really, Section 8, I'm going to say is the Section 8 rentals that I have really are specific to the neighborhoods. There's some neighborhoods where I've tried to go regular rent in them, and it never works, So I'm just like, okay, this is a Section 8 neighborhood. Whenever this house goes up, it's going to be Section 8. So, there's probably 4 or 5 neighborhoods that I'm in, or in Mobile, not far, that they're all going to be Section 8. Now, if I go out to Theodore, it's probably 50-50. I got 50% are Section 8, the other 50% are regular rent. When I advertise, if it's under 800, I'm not doing anything but taking Section 8 other than my duplex downtown because it's old. But if it's above that, then I'm gonna advertise it as either. So I'll just take what I can get, and then the best qualified person I'll take.
And we've talked about that a little bit about the rents, but let's drill down on that just in case there's any confusion out there. Does the government set parameters on the rent, first of all?
Well, yeah, it has to be like market rate, and I'm really not 100% sure how they actually figure that out. But you can charge a fair amount of rent. What's cool about it is it's really based on the size of the house a lot. Is more than necessarily the neighborhood. So what we actually bedrooms is we actually look for lots of bedrooms in lower income neighborhoods for ours because we can tend to buy those at the neighborhood prices, which are low, but we can get a lot more rent because there's more bedrooms because you get more money from Section 8 the more dependents you have, and then there's limits on how many dependents there can be in the house based on the number of bedrooms. So it kind of and there's also less of those 4 or 5 bedroom houses out there for rent. So the market that is there is more likely to find you quickly,
and they're going to stay
because
they're not going to be able to find another house.
Because it's tough to find those houses. So those are kind of the honey hole for us is the big houses with lots of bedrooms, or ideally not big, but actually small houses with lots of bedrooms. But in a lower income neighborhood.
There's the formula right there.
Well, it's not repeatable over and over and over again, but that's kind of the gold mine when you do find them.
The only thing for me is that I do have some 4 bedrooms and I have 1 5 bedrooms, but really I prefer 3 because the more kids you have in a house, what kids do to a house.
Right.
They're going to beat them up. So you're going to get more rent, but you're going to trade that for that. But really they're not going to, once they're in a 4 or 5 bedroom, they're not going anywhere.
Yeah, they're not leaving.
Because they're so, they're so limited in the options that they have when they go looking for a house. So,
and I agree. My normal Section 8 or even cash rental is like a 3-1. Which is
exactly.
I think probably yours. Older house, I have 1 bathroom, and so we're dealing with a little bit older houses usually, and 3 bedrooms is perfect. Because you can have 2-3 kids in that pretty easily. So,
but it also goes back to who you're putting in your house. Because I have a lady that has 6 kids. I walk in that house and it's clean, man.
Yeah.
I mean, she's got her kids, she's got them working in there, I guess. Yeah.
Well, it goes back to that. She doesn't want to disrupt. She could lose that voucher if the kids are tearing the place up, right?
Absolutely.
Yeah, and there's a lot of good folks on Section 8. I mean, I'm not a huge fan, of programs like this, but I do see some benefit to it, especially with large families and things like that. And so, I mean, there's a lot of good folks. And I mean, honestly, I haven't had any bad experiences with Section 8 tenants themselves. I've had some with some of the government processes, but, that's, we're playing their game, so we've got to play by their rules,
right,
kind of thing. So,
well, let's do a little pulling back of the curtain for a minute and talk about maybe some real life pros and cons, or maybe it's from a perspective of, man, I wish I would have known this. What I know now, I wish I would have known then, type of thing.
I'll let you start on that.
As far as I'm not sure what I would have known then and now. Because it's a pretty rigid program. I mean, once you go into it, it pretty much explains itself. I mean, the only thing you can do is just get better about your processes and the product. I mean, fortunately for me, I fix up the house and I want the house to be the way that I want it before I move anybody in. And for me, that cuts down on the maintenance also. So all my expenses are up front. So I've always done that, which I'm happy I did that. So I guess if in looking back, if I'd done it the other way, that would be.
Yeah, so I didn't do it that way, and decided to kind of, halfway do them. Not halfway, but, try to fix as little as we could. And, then we would get hemmed up in the inspection process, because they do have an inspection process, which isn't super stringent. I mean, they just want to ensure that the houses are safe. I mean, there's actually quite a few ugly houses that pass inspection, but, you've got to have smoke detectors and windows that work, and, you can't have loose railing or flaking lead paint. Because some pretty obvious things. But then there's some just weird little quirks that I've noticed too, from some things that just seem like they don't really matter all that much, and have overlooked things that do. So there is a weird, quirky inspection process. And I think, if I was looking back, I would definitely just fix all that stuff ahead of time, because you get the inspector out there to figure out what you need to fix. Then, it takes a while to get them back, and you're kind of dealing with a little bit of a government bureaucracy. So you can lose, 2 months of rent, potentially, waiting on that whole process. And we have in the past, kind of lost out for periods of time because we weren't tight on our processes and we didn't really understand the program. So I would definitely, if I was buying them again, I would try to find somebody like Joey and be like, hey, dude, can you tell me everything I need to know? And, I'm doing this. And I would definitely fix up the houses well ahead of time, which is what we do now, and make it more turnkey ready. So that's what I would do different.
Yeah, it's worked well for me doing it that way, because now I'm most of my houses pass on the first inspection, which for that equates to rent. Because the day that it passes, you can start collecting rent.
Exactly. If
it doesn't pass, you've got to wait for another inspection period, and you're at the mercy of when that inspector can get back out there.
Yeah, so it's not worth saving $100 or $200 to not do something. Right. It's worth it just to go ahead and do it, because you make it up on the rent, and the whole process is just smoother and easier. And
plus, it creates a better position for you and the tenant. The tenant wants to be there. You want them to be there. You want the house to be right. They want the house to be right, is the way that I look at it.
So you really can't get in a hurry. The dangerous point seems to be just trying to get the property in, occupiable condition, stick a renter in there. But your process really is the home, getting the home ready, and qualifying the tenant.
Yeah, so, if I'm going to spend all this money on the house, I don't want somebody to come in there and just beat the crap out of it.
So it's about getting it right instead of like right now. I mean, I understand the human nature is I'm paying I got this note.
I will say there's got to be massive urgency. This is a business, right? So, I've seen like landlords just wait around like 6-8 months, to find a tenant, and I can't find anything. No, we need to take massive action and get this done quickly.
Right.
But we need to do it right at the same time, So there's got to be lots of urgency involved in it. But you're right. You can't just don't take the first tenant you find. Maybe the first tenant you find is great, but you need to take some applications. You need to talk to a lot of people. You need to make sure you have the right person, in that house, which also means you're going to get that right person when you fix them up, in my opinion.
What it comes down to me for is value. You're creating a value in the house. You're creating a value in the tenant, and you're creating the tenant's value for that house. So I want somebody living in my house that has a value in my house that says, this is my home, not just a place that I live. I'm going to make it my home, and if I'm looking at a business standpoint, that's the product that I'm offering. If I'm just out here winging it,
right.
I have a house, let me jam somebody in there. I mean, that's not really a business, it's not a business plan, or that's not a business approach to it. That's what I try to keep.
Well, I know that, Jared, you help people in this real estate investment game. When you are wholesaling properties, you're going to tell somebody, hey, if you want to fix this property up, you give them an estimate of what it could sell for in optimal condition. And I'm assuming that, in the long term, really helps you grow your business and find potential investors to partner with on these bigger deals where you're acquiring 16 units, multiple units in a deal. So, people are listening, they can actually come to you and say, hey, they might just want to buy, they might be a wholesale, customer, or they might be somebody that you partner with on a big commercial deal. but you're actively looking to build relationships in this area, right?
Yeah, I will say that that's the biggest thing in real estate is the relationships, whether it's the relationships with the tenants, the relationships with your investors, the relationships with your realtors, the landlords, everybody. It's kind of a small town, and, you want to make sure you have a good reputation, but you also want to make sure you have those that network of people that are in your corner. I've done business with Joey. I'm sure that some of my tenants are probably his tenants now, so maybe one of his is mine. It's kind of a small world, and so we're all in it together. And me and him were talking the other day that you kind of want to keep things secret in business at first, and then I think you've kind of learned that too with doing your podcast and everything. That no, let's just get the information out in the wild and create a market. And I think it makes everybody better. So that's why we're not afraid to wholesale properties and things like that. Yeah, we could try to keep it all for ourselves, but I want to make it on volume and get it out there. So we love building those relationships and working with people that either want to invest in commercial property, which we do those kind of deals, and we bring people into that. We borrow money just like Joey does, to do our flips, and we also use it to acquire our rental properties before we refinance them. And then obviously we wholesale a lot of properties to investors who are going to buy their own Section 8 rentals, who are going to buy their own rental portfolio, who are going to flip their own houses.
Is it similar with you, Joey?
Yeah, anybody wants to get in this business, I always try to help them. Yeah, my thing is that I'll give you all the information. I said, if you have the guts to go out there and do what I did.
Yeah.
I mean, you guys know. I'm sitting at a table where there's been a time in your life when you're starting something out and you feel like you're getting punched in the gut every morning when you wake up. So if you have the guts to go out and do it, I want to help you. And there's success in that for me. If you want to wholesale, I want you to wholesale. I want you to wholesale to me. Everything you get, I want to see it. There's enough deals out here for everybody. I don't look at Jared. I mean, I guess he would be a competitor, but we kind of have a little bit different approach to what we can do, what we want to do. And in real estate, that there's 20 different things you could be doing, and you could get caught up in the breadth of it all, but you really need to focus. And so his focus is my focus is not wholesaling. My focus is the rentals, and then I also flip houses. So his game plan's a little bit different than mine.
If people wanted to figure out what flips you have coming, is there a way they can see them, or do they just contact you? Like say, like you come across a new flip, or they want to do business with you, how do they get in touch with you?
My office is at 15 South Florida Street. My website is yellowhammerhomes.com. I'm an accessible guy. I'm there every day. I talk to everybody. I welcome everybody. So I'm not out there hiding from people. I believe that the more people you talk to, the better your business gets. So.
Yeah, we had somebody in our...
Your net worth is your network, right?
Ooh, that's good. Well, we had somebody we have a private ecosystem for our real estate company, and one of our agents came on there and they said, well, I've got, I can't remember what it was, but it was a modest inventory of homes, and it was like, who do I call with this? And we were like, call Jared.
Yeah, which by the way, that network is super cool. I mean, I've seen there's a lot. You get the culture that you're building in there, is really awesome, and that networking it's pretty wild. I've been really impressed just being in there, getting all the notifications and things like that. It's wild.
Yeah, it's cool. All right, guys. Well, I think we're out of time. Any final thoughts on Section 8 or real estate investing in general?
I think you should buy real estate.
Buy real estate.
I think so too.
Yeah, I was on this message board, and there's constantly it's a real estate related message board, and there's constantly questions on there about, should I invest in real estate? Is real estate a good investment? Where are you, more of a stock market guy or a real estate guy?
Have you watched the last week? Yeah, no, I'm not a stock market guy. I mean, do I have some money in stock market? Yes. Do I want to have some money in stock market? No, I don't. Right. And so I'm a real estate guy. Don't get me wrong. There's different investments for everyone. I mean, we have a lot of people that lend us money in real estate, right? I wouldn't say that they're necessarily in the real estate business. They're in the lending cash flow business, right? So there's a lot of different businesses, even inside inside of real estate. But yeah, I look at the richest people in the world, and they all own real estate. And some of the richest people in the world got that way by owning real estate. So, I mean, you know, if you know who you want to be like, all you got to do is mimic them. And I would say that, you know, most of them are in cash flowing businesses, which that could be rentals, whatever. But they're all owning real estate as, you know, either wealth, you know, concentration of wealth or wealth building or hedges against the stock market. So I think real estate's the ticket. You know, they're not making any more of it. So, you know, buy a chunk of land. So
it's tangible.
Yeah.
You know, you buy a stock, it's, you know, at the end of the day, it could be a piece of paper, but it's not tangible the way, you know, this is. Plus the idea of leverage. I mean, what else in the world can you leverage? As much as real estate.
Oh yeah, the leverage is great, so it lets you expand quickly, but you're in control of your own destiny, right? Like, you know, if you wanna make the business happen, you can make it happen. I can't make Facebook stock go up, right? But and the only thing I can do is just gamble on it. And I'm not a gambler. I mean, you know, we may seem like risk-taking cowboys, but I don't feel like you're that way, and I know I'm not that way. I'm not a big risk taker. I want to make safe, conservative bets, and to me, the stock market seems crazy.
Yeah, it seems very calculated what you guys do. It's all the path to success, and what you guys do is really math. It's really
I'll tell you, I made a mess getting here, but yeah, over time you can nail down your processes, what your goals are, and really with real estate, it's really, I mean, it is tangible. You know what you're working with, and even the rentals, you can scale that, you know. So I'm not a gambler. In business, I'm not a gambler. When I go to the casino, the dice call my name. You know, so.
There you go.
All right, Joey, give us your website one more time.
It's yellowhammerhomes.com.
And Jared?
IrbyHomebuyers.com.
Thank y'all so much for being on the show. This has been good.
Yeah.
Thank you for having me.
Yeah, thanks for having us, buddy.
Thank you, everybody, for listening. I want to encourage you to go to MomentumUniversity.com and check out the real estate conference that we're going to be hosting in New Orleans, Louisiana, April 11th and 12th of 2019. This is a real estate conference started by agents for agents. We've got the most incredible lineup of speakers you've ever seen at a real estate educational event. It's going to be awesome. It's also going to be on the backs of the French Quarter Fest. So come make a weekend out of it. Let's collaborate, network, and take our business to the next level. Get your tickets today at MomentumUniversity.com.
This show has been paid for and powered by JWRE, Chasing Growth Real Estate. You can find Jason, Diana, and the whole JWRE team on the internet and Facebook. Everybody, have a great and productive and happy week.